The market is currently closed, and Datavault AI Inc., ticker symbol DVLT, finished the last trading session at exactly 1.83 US dollars. The stock slid by $0.050, representing a decline of 2.66% for the day. In the after-hours session, the price remained virtually flat, holding at 1.83. While these numbers might look like standard daily noise for a microcap volatility play, the flat line on the chart disguises one of the most aggressive, high-stakes corporate battles currently unfolding on the Nasdaq exchange. Most investors glancing at this chart see a simple red day for a small technology company, likely assuming it is just another speculative asset drifting lower on a lack of news. That is the expectation. A quiet bleed in a high-risk sector. The reality, however, is far more combustible. Datavault AI is not merely trading, it is actively at war. We are looking at a company that has taken the incredibly rare and aggressive step of filing a federal lawsuit against a prominent short-selling firm, Wolfpack Research, alleging defamation and market manipulation. When a company with a market capitalization of roughly $520 million decides to drag a short seller into federal court, it signals that the price action you see on the screen is no longer just about supply and demand. It is about survival, reputation, and a vicious tug-of-war for the narrative. The decline of 2.66% yesterday wasn't just profit-taking. It was a tactical skirmish in a much larger siege that involves Bitcoin financing, massive insider transactions from Silex Holding, and a pivot so radical that the company effectively changed its entire identity earlier this year. To understand why DVLT is sitting at 1.83 right now, we have to peel back the layers of what the market believes this company is versus what it is actually becoming. The general consensus, the common ground where most retail traders sit, is that Datavault is a rebranding exercise, a company formerly known as WISA Technologies that pivoted from wireless audio to AI data valuation to catch the current hype cycle. There is truth to that skepticism. Pivots are risky, and changing tickers often raises red flags. However, the contrarian take, and the reason you need to pay close attention to this 1.83 level, forces us to look at the specific machinery they are building to monetize data. This isn't just about claiming to use artificial intelligence. It is about the informational data exchange model they are deploying with partners like the World Boxing Council. They are attempting to turn fan data into a tradable, monetizable asset class. If they succeed, the current valuation is a rounding error. If they fail, the short sellers win. This binary outcome creates a tension that makes every tick on the chart critical. Let's look deeper into the recent market movement. The drop to 1.83 follows a period of extreme volatility where the stock touched a 52-week high of $4.10 and a low of roughly $0.25. The fact that it is trading near the midpoint of this range suggests a battle for equilibrium. Yesterday's volume was lighter than the explosive days we saw in November, but the selling pressure remains constant. This is characteristic of a stock under short ladder pressure, where small, rapid-fire sell orders are used to walk the price down, demoralizing retail holders. You can see it in the intraday chart. A sharp drop at the open, followed by a choppy, sideways grind that refused to recover the opening level. This pattern often indicates that larger entities are capping the upside, absorbing any buying momentum to keep the price suppressed below key psychological resistance levels, specifically the $2.00 mark. The technical picture is messy, but in a way that suggests a coiled spring. The stock has found support around the 1.75 to 1.80 region multiple times. Each time it dips here, buyers step in. Not in droves, but with enough conviction to prevent a collapse to the 52-week lows. This support level is likely being defended by long-term stakeholders who believe in the outcome of the Wolfpack litigation and the Silex partnership. Speaking of Silex, their role here cannot be overstated. Silex Holding is a major owner, and their recent sale of shares worth over $800,000 might have spooked the market, contributing to the recent slide. But contextualize this. Silex also poured investment back into Datavault and is deeply integrated into their future financing strategies. When a major holder sells, the knee-jerk reaction is to flee. But smart money looks at the net position. If Silex is using DVLT shares to manage its own liquidity while maintaining a strategic partnership, the selling is transactional, not an abandonment of the thesis. We need to discuss the business model because this is where the expectations versus reality gap is widest. You might know this company as the one that makes wireless speakers work better. That was the old WISA. The new Datavault AI is pitching a data score and data value ecosystem. The concept is to allow companies and eventually individuals to audit, value, and monetize their data assets. Think of it as an appraisal service for the digital age, powered by supercomputing. The recent deal with the World Boxing Council is the proof of concept. They're not just putting a logo on a boxing ring, they're capturing authenticated fan interactions and creating recurring revenue streams from that data. This is a high-margin, scalable software play, far removed from the hardware constraints of their past life. The market, however, hasn't fully priced this in because the revenue from these new ventures is still nascent. Investors are waiting for the show me the receipts moment. The disconnect between the legacy hardware valuation and the potential software multiple is where the opportunity and the risk lies. Now, we must address the elephant in the room, the short interest. This is the section you need to listen to most carefully if you hold shares or are thinking of buying. The borrow fee rates for DVLT have been spiking, fluctuating between 10 and 15% recently. This is a high cost of business for short sellers. When you see borrow rates climb, it means the pool of available shares to short is drying up. It indicates that the trade is becoming crowded. Fintel data and other tracking platforms show significant off-exchange short volume. This means a lot of the betting against the stock is happening in dark pools, away from the lit exchange where you and I trade. This lack of transparency is exactly what Datavault's management is fighting against with their lawsuit. They are alleging that the short thesis is built on falsehoods designed to artificially depress the stock price. For you as an investor, this situation creates a powder keg dynamic. If the company releases positive news, perhaps a settlement in the lawsuit, a new major contract like the WBC deal, or a favorable earnings surprise, the shorts could be trapped. With a limited float and high borrow costs, a rush to cover could trigger a rapid repricing, commonly known as a short squeeze. But you must be realistic. Short sellers like Wolfpack Research are sophisticated. They do not typically bet against companies with pristine balance sheets and overflowing cash reserves. They target companies with vulnerabilities. Datavault is still burning cash and is in a transition phase. The short thesis likely rests on the belief that the company will run out of runway before its AI data model becomes profitable. Your job is to decide who has the better clock, the shorts paying high interest or the company racing to generate revenue. Let's talk about the financing, because this is wild. Datavault recently closed a financing round where they accepted Bitcoin. Yes, actual Bitcoin. They received over 1,200 Bitcoin in exchange for warrants. This is an incredibly unorthodox move for a NASDAQ-listed company and aligns them with the crypto-adjacent crowd. It signals that management is willing to step outside traditional banking norms to secure capital. For the crypto bulls, this is a massive green flag, a sign of forward-thinking treasury management. For conservative institutional investors, it might be seen as a gimmick or an unnecessary risk. But in the context of 2025, where digital assets are increasingly integrated into corporate balance sheets, it differentiates DVLT from every other struggling microcap. If Bitcoin runs, DVLT's balance sheet strengthens overnight. This correlation is a hidden catalyst that many traditional equity analysts might miss. There is also a retail sentiment angle that you cannot ignore. The online discourse around DVLT is polarized. On one side, you have the true believers who see the Wolfpack lawsuit as a heroic stand against Wall Street manipulation. They view the current price of 1.83 as a gift, a chance to load up before the market wakes up to the data monetization potential. On the other side, you have the cynics, who see a company that changed its name, pivoted its business, and is dabbling in crypto as a desperate attempt to stay relevant. This polarization creates volatility. When these two groups clash, you get days where the stock moves 10 or 20% on no news. You need to be prepared for that kind of whiplash. I want to pause here and ask you a direct question because this debate is central to the stock's future. Do you think the lawsuit against Wolfpack Research is a masterstroke by management to protect shareholder value, or is it a distraction from the core business fundamentals? Drop a comment